This could be a big week for the markets. Let's talk about why. I am Dr. Stock, Doctor of Education, and I often start with a dad joke. Legitimate question here, kind of dad jokey though. Seagulls. What noise they make? Gull, gull. So it sounds kind of like the gull part, and they're by the sea. Is that how they got their name? All right, we have a ton of economic data coming out this week that's going to be highly impactful to the markets. I'll share that with you from Trading Economics. No affiliation, just a site that I think has a lot of really well condensed information in it. And then also moving over to the charts, we'll look at SPY, QQQ, and then a few other things that I think are going to impact it as well. So let's get right into it, and I'm going to pop this up for you. So we're looking at July 1st here, which means we get manufacturing data. For ISM, I think that's going to be impactful around 10 a.m. today. So by the time you see this, we'll probably already have that coming out for us. Above 50 is going to be expansion. Below 50 is going to be contraction. So if we're talking about the R word here being recession, looking for signs of further contraction is something that could definitely be damaging to our case for a bullish market. And if we're looking at further expansion or higher numbers, especially beating consensus, that can be bullish for the market. So we'll be watching for that. Moving over into Tuesday, Jerome Powell, I believe he's speaking with the European Central Bank. I don't know that he's going to say something impactful, but definitely worth tuning into to see what he has to say. Jolts, this is the first really big thing that we have, and I'll share with you why I think that's so big. So for the job openings, if we go out to the max level here and take a look at the chart, we are getting near pre-pandemic levels. So the peak prior to the pandemic, let's see if I can get cursor on it. It looks like it was November of 2018. And these thousands are in, so this is thousands. The K is 1,000 followed by 1,000. So this is about 7.5 million, almost 7.6 million job openings. And you can see what happened back here in the 2008 financial crisis that we had leading up to it, a significant drop in the number of job openings. And so we bottomed out in 2009. Before climbing back up since that time. Pandemic came, of course, we bottomed out with all the shutdowns and everything like that. So since then, climbed rapidly with a lot of job openings, and then we started getting a tighter labor market. But I think that we really start to run into trouble once we get down near that 7 million job openings number. So once we get to, let me see, that's January, February was, okay, we'll just call it 7 million, 6.97 million job openings. If we drop down below that, or as we continue to decline, if that's what happens, that I think is where we really start to get into some of the mess as we approach the low 7 million number for the number of job openings. So because once the economic data can say that the number of job openings is now below what we have prior to the what we had prior to the pandemic, I think that that's where the sentiment really shifts on that, and really starts to echo recession a little bit more. So we're going to be watched for that. So even though it's a relatively high number compared to what we had historically, it's still worth watching. So moving on from there, another Fed speech on Wednesday coming up. ADP employment change, so private employment, we'll be watching for that as well. Challenger job cuts, also a nice number to watch. Not the thing that I've seen as too much of a market catalyst recently. But moving on from there, we get more services data coming out 10 a.m. and that's on Wednesday, July 3rd. And then skip July 4th for the markets anyway. Happy Independence Day this week to everyone, and thank you for your service. For those of you who are in the military or have served in the military, including my family members, as there are quite a few of them that have served in the Navy, the Army, let me see what else we have, the Marines. I can't forget my my brother out there. I think he's the only one of them who actually went to the Marines. So hoorah, devil dog to him. And moving on to Friday then, non-farm payrolls. Going to be absolutely huge for us to watch this number. That consensus number, already pretty low compared to what we got previously. If that comes in at that number, a lot lower, I should say, the market's really going to price that in. I think the thing that it's going to really react to even more is the unemployment rate that we also get, and that's at 8:30 a.m. on Friday on July 5th. So we're going to have to watch for that one. And 4% I thought would rock us pretty hard. And honestly, we didn't get rocked as hard as I thought. But if this quickly goes to 4.1, I think that that's something that can really, like as that continues to climb, because it doesn't usually happen slowly for unemployment rates, it normally happens pretty rapidly. So we just went from 3.8 to 3.9 to 4. And so if the next month we get a fourth month where we're coming at 4.1, then we start to see, you can already see if we look at the max number that I clicked on, 10-year, let's go max on this one. So that way you can see what that looks like. We've actually really started to inflect back up off of fairly historic lows And as that employment rate starts to creep up on us, especially if it does happen rapidly like you see here, so over the next year from now, if we continue to see that climb month after month after month take place, that's something that can be really detrimental to the markets, we'll say. So really looking forward to what we get for unemployment rate. And I think the market's going to be really responsive to what we get. So if it stays at 4 or drops, pulls back to 3.9 or something like that, that could be bullish for the markets up above 4%, especially if we get something surprising. If we skip right over 4.1 and 4.2, the market's going to absolutely despise that, in my opinion. And we'll see if that plays out with the markets themselves. So let's jump over to the charts for the markets right now to see where we closed out the second quarter and where we're starting off the third quarter for 2024. So there we go. That's actually Tesla that we're looking at right now. I'll get to those stocks in a separate video because I knew that this one would get a little bit long and I'd like to be respectful of your time here. So what do we get? So going back to Thursday, on June the 20th, we had a high price in for SPY, which tracks the S&P 500, of 550.12. And then where did we have the high price? 550.28. So we actually did peekaboo to a slightly higher high, but we did close a lot lower to end the quarter, and that could be a lot of profit taking after another fairly incredible quarter, if I may say so myself here. So let me see, going back to the beginning of April, where do we find the beginning of April? Beginning of April, all the way back here at 522, ended at 545. Not a bad quarter to go about 4-ish%. So what that could mean as we see the declining momentum here, that as these numbers come out, I think they're going to be highly influential to see if we continue to push down through and sell off lower, or if we continue higher in this one. And remember, in my previous videos, if you haven't watched them, go back and watch them. We normally do get some pretty darn good performance in the month of July for the first half of it. And so we'll see if history repeats itself there. But I do think the economic reports that we get this week can really impact that direction. And of course, the week following should be the time when we get the CPI numbers and PPI numbers coming out. So that's also something that following week to pay attention to as well. Hopefully they stay stable or continue to decline for bullish markets here. Something I really want to point out to you as we're looking at SPY, and let me take down some of these other lines so that it's not as confusing. This one right here, this is the 20-period moving average, and it has been acting as support for us. That we broke down below it for a little bit and we caught another trend line, pushed us back above, bounced. If we come down and tag that, we might bounce again. And then if we retest it, that could be where that sell starts to come in. And then this rising wedge pattern that we have could be that thing that starts to either it catches us again and we bounce again, or it's something that pushed down through and we flip to a further sell-off. So that's something to pay attention to for SPY. And I do want to keep on putting that reminder out there on the monthly chart. So yeah, I know all these things that are down here, but instead I want to draw your attention to the RSI, which is this bottom chart that I have down here. And the fact that we do have, as the market continues to climb upward, that we have a rise in price for SPY, that we have a decline in momentum. And that hasn't happened since back with what we had in the dot-com bubble. So going back here, and not necessarily that we necessarily have a bubbly market right now, but a highly concentrated market. And maybe that's it for some of the AI stocks out there. NVIDIA, I think, might be a little bit overdone at this point still. I think we could possibly see a little bit more of a pullback on that one. Their earnings, by the way, won't happen until middle-ish of August, by the way, because their fiscal calendar doesn't actually end till the end of July. And then shortly after that, usually a couple weeks, 2 weeks or so after that, then they will report in August. So we need to watch this declining momentum here, because this is something, as we get that bearish divergence plus some of the other signals that we have out there, we could have a further correction happening over this next quarter, possibly spilling in a little bit to Q4. And that's actually something I didn't make enough mention of, but I probably should mention a little bit more. And that would be the election that's coming up, and then the most recent debate that we've had. And for example, Enphase is a company that I've been tracking for a while and has been trading in a range for a while. And man, it had a significant sell-off, and so did First Solar following that. And that's because it falls under the umbrella of clean energy stocks. And I will say that the longer that the Democratic Party handles this situation in a flat-footed manner, and this is not to be political, this is all about the market here, but if the Democrats happen to handle this in a flat-footed manner and don't necessarily show confidence in who's going to be next, if it hasn't already been announced, I don't believe that it has, though, that's going to be something that I think is going to continue to punish the clean energy stocks that are out there. And I think it's also going to further spur on the Republican leader, which I believe right now is Donald Trump. And that's something that it could be very positive for different parts of the market. I think the energy plays in general, especially where oil is involved. I think that could be something also very good. I think that could serve a lot of stocks really well, but I don't think clean energy is one of them. I think that's going to be punished for us. So moving back over into here, let me break down away from this. So I do think that we have a pullback coming our way where the RSI is concerned, tracking the momentum of SPY, and we'll have to see where that falls for us. QQQ, where do we peak out for this one? Let me see. It's between these 2 days. So it's either the 17th or the 20th. So on the 20th, 46.84 and 46.86. So Monday, the 17th of June was our peak for QQQ, which tracks the NASDAQ 100. And then where did we get to? We got to 487.20. So we went just a little bit higher before significantly selling off here. And something else we want to watch for is also about the higher highs versus lower highs, and also higher lows versus lower lows. Because as we get different peaks and valleys in there, higher highs and higher lows, still bullish as a sign, at least as far as the extreme values are concerned. And then if we have lower highs and lower lows, that can be bearish as far as those extremes are also concerned. And I still think the same as what we had to pay attention to for SPY, we still want to be watching this 20 period, which is this beige line that goes right through here. So let me bring that down. There we go. So you can see the bounce that we had before. We break down below that line. Not only do we get a new lower low compared to what we had going back to Monday, the 24th of June, but then that also means that we break down through this 20 period moving average that we have that's part of the Bollinger Bands indicator. So just a few other things that I want to leave you with in this video. One is DXY. So this is the strength of the US dollar. And so for the US dollar index that we're looking at here, we have a consolidation pattern. We're up above the 50-day. I'm sorry, this is the 50-week that we're looking at. And we're also above the 50 on the RSI. So we still have momentum there. And then we still have above the 200 and the 50, so still bullish. We're getting higher lows out of that, but we're getting lower highs out of that. So we have to see if we break out at the top of that. If we do, it's a bearish indicator for the markets. And there is a bullish bias for what we see right here on the US, on the Dixie, we'll call it. Having that bullish bias here on the Dixie means that we could have a bearish bias, as they are probably going to move inversely to one another with the stock charts that we have. And if we go over to the 10-year Treasury yield, breaking back up above the 200, up above the 50 that we have here, and another consolidation pattern going all the way back to October and then bottoming out in December of last year, and then not necessarily moving outside of that consolidation pattern since that time. So if this is one that, as those bond yields continue to rise, this is one that has, the way it has been acting is that we would potentially have some further selling in the markets, really especially above 4.5. So if we break outside of this and go to the upside, that's where the real bearishness for the markets come in. It's not too huge of an indicator as long as we stay down below 4.5, in my opinion. So we want to be really watchful for that cross of the 10-year Treasury yields to go up above that. Those falling yields, by the way, at least as long as we're in the low 4s or in the high 3s, I believe that this is also something that can be bullish for the markets. If that drops down through the bottom, I think the markets could significantly rally during that time. So below 4.5, good for the markets. Above 4.5, I think the markets start to worry a little bit more about servicing the US debt, and that's where that bearishness comes in for the markets. All right, let me just wrap things up here with Bitcoin, because Bitcoin's still trading its range. It got rejected off its 20-day, which is right here. It bounced pretty close off the bottom of this trend line here, which is down around the 200-day as well. And really, we want to break over that 20-period simple moving average for the Bollinger Bands to show further bullishness coming in the near term. The RSI is down below 50. So because I told one of my Patreon members, one of my stock group members, that I would talk about Enphase in this video, I'll toss it in here. I'll put a more detailed one in my next video, which I'll be releasing soon. That will cover more individual stocks, Tesla, Enphase, NVIDIA, and then some bonuses out there as well that I also want to share with you. But you can see the range that we were trading in. And we actually had quite a day on Friday, dropping 5%, whereas First Solar dropped about 9%. TAN, the solar ETF, down between 4 and 5%. Today, dropping a little bit more. And now, mind you, we can still be saved by finding support right around $95 per share. But this is one that solar stocks could continue to experience some pain like I said, as the Democrats continue to handle things in a flat-footed manner, I think it's going to be punishing to the renewable energy stocks. And something that could come in, swoop in, and save this thing would be that we would have further evidence for sooner cuts for the interest rate sensitive stocks. I think that could come in and really help out solar, besides finding a candidate or bringing some sort of strength or excitement back to the Democratic Party. And again, once again, it's not about politics here. It's about the market impacts that the politics could have on it. So that's as much as I'll touch on that topic for now. So guys, thank you very much for watching. I really do appreciate it. The market, I think it's hanging in limbo right now. If you watch my previous video, there's still a lot of potential that we have further upside, especially with the first 2 weeks of July. We do want to watch the economic reports that come out, especially what we get from JOLTS and non-farm payrolls and unemployment rate that all come out this week. And yeah, I'll tell you what, it's an exciting time to be in the markets. And if those reports come out unfavorably, we could have a bit of a correction coming in. And if they do come out relatively favorably, then we start to get that 4-ish% potentially that we get with with the S&P 500 and with the NASDAQ 100. We could start to see that historical outperformance coming out in the first part of July that happens here. And, we could see that final rally coming in prior to the election. Possibly it could play out that way. And then a little bit of nervousness and hesitation coming into the markets leading up to the election itself in November. So thanks, guys, for watching. I really do appreciate it. If you like my commentary, hit that like button, subscribe for more, and I'll have a video out very soon for you about some individual stocks. Like I said, Enphase, I'll be a little bit more detailed in that one. And then also Tesla, Nvidia, plus the bonus stocks that I have for you that I just shared with my other stock group. And I would also like to bring it here to you to let you know what I've been letting them know and keep you in the loop with what exactly I see happening in the markets right now. As always, thanks for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.